Hey everyone, it's Graham Stephan. Today, we're talking about something super important: investing. You hear it all the time, right? Invest young, make your money work for you. But it can seem intimidating, like something only financial experts understand. Here's the truth. You don't need to be a Wall Street whiz to start investing. And the best time to start? Today. Seriously, it's never been simpler to get started. We're talking about opening a brokerage account, your gateway to the world of investing. And guess what? Many of these platforms are free to use. Robinhood, Webull, Schwab, they all offer accessible options for beginners. No more excuses about complicated paperwork or hefty fees. Investing is for everyone. Now you might be thinking, Graham, I don't have thousands to throw around. That's okay. The beauty is, you can start small and still make a big impact over time. Even setting aside a little bit each week or month can add up. Remember, the goal is to build a habit, to make investing a regular part of your life. Trust me, your future self will thank you. Think of a brokerage account like your own personal investment hub. This is where you'll buy and sell investments, track your progress, and watch your money grow. It's like having a digital piggy bank, but way more powerful. Don't let the word brokerage scare you. It sounds fancy, but signing up is usually as easy as creating an account on your favorite social media platform. You'll provide some basic information, verify your identity, and boom, you're in. Now, with so many options out there, how do you pick the right brokerage account for you? Well, it depends on your preferences and what you're looking for. Robinhood and Webull are known for their user-friendly interfaces, particularly appealing to younger investors. They offer a streamlined experience with no commission trading, making them great for beginners. For a more traditional approach, you have established players like Schwab. Schwab has been a trusted name in the investment world for decades, providing a robust platform that caters to a wide range of investors. Whether you're just starting out or have years of experience, Schwab offers tools and resources to help you make informed decisions. They might have a slightly higher learning curve, but offer a wider range of investment options and resources, catering to both beginners and seasoned investors. From stocks and bonds to mutual funds and ETFs, Schwab provides a comprehensive suite of investment products. Their educational resources, including webinars and articles, are designed to help you understand the market and develop your investment strategy. The best part? Setting up your account usually takes just a few minutes. The registration process is straightforward and user-friendly, ensuring that you can get started with minimal hassle. You'll be guided through each step, from entering your personal information to selecting your investment preferences. You can literally do it right now while watching this video. The convenience of modern technology means you don't have to wait. With just a few clicks, you can open an account and start exploring the investment opportunities available to you. Just click the link in the description to explore some of the options I recommend. Don't overthink this step. Taking the first step is often the hardest part, but it's also the most important. By clicking the link, you'll be directed to a page where you can compare different platforms and find the one that best suits your needs. The most important thing is to choose a platform you're comfortable with and get started. Remember, the sooner you start, the sooner you can begin building your investment portfolio. Take your time to review the options, but don't let indecision hold you back. Your financial future is in your hands, and the first step is just a click away. One of the smartest moves you can make as an investor, especially when you're starting out, is to automate your investments. Remember those brokerage accounts we talked about? Most of them let you set up recurring investments. This means you can automatically transfer a specific amount of money from your bank account to your investment account on a regular schedule. Think of it like this. It's like setting up auto pay for your bills. But instead of paying for expenses, you're paying your future self. By automating your investments, you take the guesswork and emotion out of the equation. You don't have to remember to invest every month, and you're less likely to be tempted to spend the money elsewhere. The beauty of recurring investments is that they add up over time, especially when combined with the power of compounding, which we'll talk about more later. Even if you start with a small amount, like $50 or $100 a month, those consistent contributions will grow into something much bigger over the long term. It's like that saying, the best time to plant a tree was 20 years ago. The second best time is today. The same goes for investing. By setting up recurring investments, you're essentially building a solid financial foundation, brick by brick. Each contribution is like adding another brick to your financial house. And the best part is, you don't have to be a financial expert to do this. Automation makes it easy for anyone to become a consistent investor, regardless of their income or experience level. Remember, the key is to start small, stay consistent, and let time work its magic. Alright, so you've got your brokerage account set up and you're ready to start investing. But where do you even begin? With so many investment options out there, it can feel overwhelming, right? Well, that's where index funds come in. Now, don't let the name scare you. Index funds are like the all-star team of the investment world. They're like baskets that hold a bunch of different stocks or bonds, allowing you to invest in a diversified portfolio with a single purchase. Think of it like this. Instead of trying to pick individual winning stocks, which is kinda like trying to predict the future, you're investing in the overall performance of the stock market. And historically, the stock market has always gone up over the long term. Some popular index funds, like VTI and VOO from Vanguard, track the performance of the entire US stock market. This means you're essentially investing in a slice of some of the biggest and most successful companies in America, like Apple, Amazon, Google, you name it. Now, why is this a good thing? Well, it all comes down to diversification. Remember that old saying, don't put all your eggs in one basket? That definitely applies to investing. By investing in an index fund, you're spreading your money across hundreds or even thousands of different companies. This reduces your risk because if one company or sector doesn't perform well, it won't sink your entire portfolio. Another cool thing about these index funds is that they're self-cleansing. This means they have a built-in mechanism to keep themselves updated and relevant. They automatically adjust over time, adding or removing companies as needed to reflect the current market conditions. This dynamic adjustment ensures that your investments are always aligned with the latest market trends and economic shifts, so you don't have to constantly monitor them or make changes to your investments. They practically manage themselves. This hands-off approach is perfect for those who prefer a more passive investment strategy. And the best part? Index funds have historically provided solid returns. Over the years, they have shown a remarkable ability to grow steadily, offering investors a reliable way to build wealth. While past performance doesn't guarantee future results, over the long term, they've consistently outperformed many actively managed funds. This consistent performance makes them a popular choice among both novice and experienced investors. Plus, they usually have low fees, which means more money stays in your pocket. Lower fees can significantly enhance your overall returns, especially when compounded over many years. This cost efficiency is one of the key advantages of index funds, making them an attractive option for anyone looking to maximize their investment returns without incurring high costs. In summary, index funds offer a self-cleansing mechanism, solid historical returns, and low fees. They provide a simple yet effective way to invest in the stock market, making them an excellent choice for those seeking long-term growth and financial stability. Now, let's talk about one of the most powerful forces in investing: compounding interest. It's often called the eighth wonder of the world, and for good reason. Imagine this. You invest $100 today, and it earns a 10% return in a year. You now have $110. Not bad, right? But here's where the magic happens. Section 2. Time is your greatest ally. The 7-year double up. The next year, you're not just earning a 10% return on your original $100. You're earning it on $110. So that year, you earn $11 in interest, bringing your total to $121. See how that works? Your money is making money, and then that money is making even more money. It's like a snowball effect, and the longer you let it roll, the bigger it gets. Section 3. Doubts and discipline. Staying the course. This is why starting early is so important. The earlier you start, the more time you have for compounding to work its magic. Now, I know what you might be thinking. What if the market crashes? Of course, there will be ups and downs in the market. There always have been, and there always will be. Section 4. Riding the waves. Volatility is normal, but remember, we're playing the long game here. We're not trying to time the market or get rich quick. We're investing for the long haul, for our future selves. And historically speaking, the stock market has always gone up over the long term. So, even if there are dips along the way, as long as you stay invested and keep contributing consistently, you're likely to come out ahead in the end. Section 1. Start today, change tomorrow. Look, we covered a lot of ground today, but it all boils down to this. Investing is easier than you think, and it's one of the most powerful things you can do for your future. Whether you're just starting out or looking to refine your strategy, the key is to take action. You don't need to be a financial expert, and you certainly don't need to have a degree in finance or economics. You don't need a ton of money to get started either. Even small, consistent investments can grow significantly over time. And you don't need to spend hours researching complicated investment strategies. The beauty of investing is that there are simple, effective ways to grow your wealth without needing to become an expert. Just take that first step. Open a brokerage account, which is easier than ever with so many online platforms available. Set up a recurring investment into a low-cost index fund, even if it's just a small amount, because consistency is key. And let time and compounding do the heavy lifting. The magic of compounding means that your money earns money, and then that money earns money, creating a snowball effect. Remember that story about the snowball? It starts small, but as it rolls, it picks up more snow and grows larger and larger. That's your money growing with compounding. The earlier you start, the more time your money has to grow. The sooner you get that snowball rolling, the bigger and more powerful it becomes. Over time, you'll see your investments grow, and you'll be amazed at how much progress you can make. I truly believe that everyone has the power to achieve financial freedom and build a brighter future. It's not just about the money, it's about the freedom and opportunities that come with it. It all starts with taking that first step today. Don't wait for the perfect moment, because it may never come. So, what are you waiting for? The best time to start investing was yesterday. The next best time is today. Click the link in the description to explore some of the resources I mentioned and take advantage of the tools and information available to you. Start investing in yourself today. You've got this. Remember, every journey begins with a single step, and your journey to financial freedom starts now. Take control of your future and watch as your efforts today create a better tomorrow.